What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. Hope you are doing well. Hope your week is getting off to a great start. We are going to cover this week's fundamentals report. Every Monday, I put out a free weekly newsletter. It's a pretty long read, but it summarizes everything going on in the Bitcoin space every week. Of course, this was a huge week for Bitcoin, but we're going to go through it. I make my tangents and everything. I am live streaming on YouTube, Rumble, Twitter, and Telegram. You can find links to all those in my pinned tweet. If you're over on Twitter, usually Twitter, gets the most concurrent viewership. If you guys would jump over to the YouTube or the Rumble and subscribe, turn on notifications so you know when I'm going live. I usually live stream at least twice a week, if not 3 times a week, Monday, Wednesday, and Friday. And I put out a ton of free content on the website. So if you go to bitcoinandmarkets.com, you can see I have, just in the last week, I put out about 5, 6, 7 pieces of content. So check that out. It's not all free. There is a premium tier. You can check out ways to support my stuff there as well. And Telegram is the main community. So check out t.me/Bitcoin and markets. Okay, let's get into the Bitcoin fundamentals report. I will be watching the chat. Dex Invictus is back with us. What's up, my man? Glad you could make it. Hope your week is getting off to a good start. So I created this thumbnail. I thought it was pretty cool. I'm using Midjourney and getting the hang of it. So this turned out pretty good. Okay, so quick navigation. I have moved things around a little bit. In case you missed it, is now at the end under the previous posts tab. We will take a look at that real briefly at the end, but trying to minimize what's up front here. So snapshot of Bitcoin. Here we go. Let's zoom in. So guys, I pay attention probably 16 hours a day to the Bitcoin market, so you don't have to. Or if you do, then you can join the community and you can be with like-minded people that are watching this stuff and don't have a tunnel vision, don't have blinders on, and are just going down the hole of we learned one thing about inflation, about central banking, and now Bitcoin, evil fiat, evil central banking. You have a little bit more nuanced thinking, and you can join the community and talk to people about this. Okay, so snapshot of Bitcoin weekly trend. We are breaking out. Of course, we'll look at a live price chart in the price analysis section. Media sentiment is very positive. Of course, this weekend was huge with Trump and all that. Network traffic is very low. We'll take a look at mempool. We'll take a look at different types of transactions and mining news down in the mining section. And the mining industry has recovered completely. We'll see hash rate. We'll see hash ribbons down below as well. Price section, stand by. Sorry, my boy just came home. So, okay, price section, at the time of writing, it was 67,318. That is up almost 4,000 since my last newsletter. I did skip last week. I was out of town visiting family and didn't want to spend the whole day writing the newsletter. So last week was skipped, but this is the change from the last newsletter. That's up 6%. Market cap is 1.33 trillion. Satoshis per dollar, 1487. Finny, that's 1/10,000th of a Bitcoin. That is my coined denomination, right in the middle of the decimal places. It's I love it. I wish people would use it. It's $6.72. It also is very, once we hit 100K, this is going to be 10. And when we hit 1 million, it'll be 100. So it's a very easy denomination to wrap your head around. Okay, mining sector. Previous difficulty adjustment was plus 3.2%. And the next one coming up in a day's time is 11%. That's a huge, huge recovery from the mining sector. Of course, we talked about when price comes back, hash rate's going to come back, and that's exactly what happened. Mempool, slightly larger than 2 weeks ago, but 145 megabytes. Fees are very, very cheap, though. If we went back in time 4, 5, 6 years, and we had 145 megabyte mempool, fees would be up there at 10 or 20 bucks, at least 5. But now we can manage this. Somehow they're managing it, and we have just a 57-cent fee. That's 6 sats per virtual byte. And if you want to wait a little bit longer, you can get in later for saving about a dime, about 20%. Okay, Lightning Network is continuing to get worse and worse and worse. We did have a period last couple months where we had a streak of gains for, was it, I think it was capacity was going up, but channels has been falling consistently for over a year. But this week we did have a decline in the capacity by 14 Bitcoins, down 0.3%, and channels also dropped over a percent, over 1.5%. We lost 820 public channels in a Lightning Network. So I hope that it continues. I hope it has a bright future, but it has just not gone anywhere in the last 2 years. Pretty disappointing performance by the Lightning Network, to be honest. And that's kind of why my favorite scaling solution is, with different trade-offs, of course, is sidechains, Elements sidechains specifically. Okay, so that's a snapshot of Bitcoin. Let's get into the Bitcoin headlines. Trump speaks at Bitcoin 2024. I'm sure all of you watched it. It was probably the most watched event in Bitcoin history. Monumental moment, truly monumental moment. Not only is he the leading candidate for president, speaking favorably about Bitcoin, but he is making significant promises not to sell Bitcoin and free Ross, support Bitcoin mining, et cetera, et cetera, et cetera. His speechwriters are on point. The one thing that they don't get right is they say the word crypto too much. Crypto and Bitcoin. I do like that they separate that out most of the time. They say crypto and Bitcoin, because Bitcoin is not crypto, and it's detrimental to people to conflate the two, because crypto is just scammers trying to get your Bitcoin, trying to pull the rug on you and that kind of stuff, where Bitcoin is different. So that's one thing that I'll dig on them for on the speech. But overall, just saying everything that Bitcoiners really want, short of, hey, we're going to buy, like RFK, we're going to buy 4 million Bitcoins. He didn't say that, but he did say that they were going to have a national stockpile, a national Bitcoin stockpile. Okay, Alex Thorne, he has a shortened version of the 50-minute speech on Twitter. You guys can go to this link, go to this tweet and watch this. He broke it down to a 12-minute version, condensed it, but pretty good. The speech has received a ton of coverage, so I'll just add a few more thoughts. This provides a stark difference between populists and the global Marxism of the current administration. If you guys know my content, the whole idea is similar to Tom Luongo, where he sees Davos man, he sees this global elite, and he does view them as communists, but I call them the globalists or global Marxists. And that is versus this rise of populism. So global Marxism stands for like losing national sovereignty, losing rights, overturning constitutions around the world, having a layer above the nation, and also this cultural Marxism. Like you have to, there's just communist ideas with climate change, with oppressor oppressed in a cultural sphere, with identity politics. There's always an oppressor and oppressed, just like in Marxism, how there's an oppressor and oppressed. So that's the global Marxists. And then the populists are more nationalism. And you can see that rising everywhere. Of course, the US, Italy, France, Germany now, Sweden, Austria, Hungary, Poland, the UK even has a thriving populist movement. So populism is on the rise in the West against this global Marxism. And this speech was once again highlighted this difference, I think. Democrats cannot support Bitcoin because their goals are predicated on control and tyranny. Bitcoin is everything they are fighting against. The Dems might be able to pay lip service to Bitcoin during the election season, but we all know they could do something about it right now, being in the White House. So they can make all these promises, but it's just a promise. Why not do it? Okay. They are on the back foot because they can actually do it now. Trump can say, I will do it when I get in, but that doesn't make sense to say from the Democrat side because they're already in. They could do it. They could fire Gary Gensler today, and he has said he's going to step down in 2025. He sees the writing on the wall. They could order Treasury to begin work on a Bitcoin reserve right now, but they won't. Okay, number 2, this is a natural outgrowth of Bitcoin's incentive structure and game theory. First mover will get most of the benefit. The US government and Trump need Bitcoin. Bitcoin doesn't need the government. But if they jump on and accelerate Bitcoin's global domination, they will only be helping people everywhere. So a lot of people say, oh, Bitcoiners are all against government. And then as soon as some government says they're going to adopt it, then they are all about it. Okay, now they're all about government. But we're not. We just know that they are going to accelerate Bitcoin's adoption, and they can't change the incentives. Okay, they are going to humble themselves to buy in. Maybe they think they can change it. Maybe they think they control it, but they cannot. And Bitcoin will just be brought to the masses faster. It'll be accelerated by this type of adoption. Okay, number 3. I've said for years the dollar isn't going away because they can just back it with Bitcoin. That doesn't seem so far-fetched today, does it? All right, so that's all about the Trump stuff. One of the bigger announcements, and I think this is perhaps even bigger than Trump, and that is the combination of Trump's pledge with this bill from the Senate. Cynthia Loomis announced it, and she called it our Louisiana Purchase moment. I agree. So let's see if I can play this.
This is the solution. This is the answer. This is our Louisiana Purchase moment. Thank you, Bitcoin.
All right. It was her speech was pretty good. She did a good job on it. And yeah, I think this is the huge deal. The bill would create a strategic Bitcoin reserve made up of the current 210,000 Bitcoins held by the government and would add another 800,000 to get the total up to 1 million. They'll accomplish this by using excess reserves and foreign currency reserves to buy at current market price, $85 billion in Bitcoin. Of course, it will end up costing much more than that, perhaps 500 billion when all is said and done, or even 1 trillion. And I had another tweet up here. I'm going to share this one. Oh, that's not the right one. Let me go find it. Here it is. It's from George Selgin, and he's looking into this idea proposed by this bill. And yeah, so he's saying he's talked to some people in her office familiar with the details. It turns out that it has practically nothing to do with bank reserves or the 3 trillion in Fed assets backing them. Therefore, another thread. So he had this thread 12 hours ago, then he replaced it with this thread. The plan is, in fact, the much more modest one of having the government acquire 1 million in BTC, or about 64 billion worth, and the Fed would not actually be acquiring any, though it would be involved in the process. The Treasury alone would acquire them. All right. How? It would take advantage of the gold in Fort Knox, which is presently officially valued at about 1/6 of its actual market value. So the U.S. has something like 8,000 tons of gold. I think it's like 8,200 tons of gold. Not all of it is at Fort Knox, but a lot of it is. And it's marked to market much more cheap than the market price. So what they're saying is they're going to just go ahead and market to market. It's going to be a huge stimulus to those reserves there, which is presently about $350 billion. Step 1 is to have the Treasury revalue that gold at its market value. All right. To realize on that tidy gain of 350 billion, the Treasury would give the Fed fresh new gold certificates equal to it. So the Fed originally swapped gold certificates for the Fed's actual gold when it confiscated the latter in 1934, before officially devaluing the dollar. You guys have been around, you probably remember that. The Fed would in turn credit the Treasury General Account, TGA, by the value of the extra certificates. That is, it would have an extra $347 billion or so in excess assets backing a like increase in its liabilities, with all the latter consisting of a big, fresh TGA deposit. That sounds very inflationary to me. Now, after this announcement, Jack Mallers was at the news desk on the live stream for Bitcoin Magazine, and he was saying this is neutral, the dollar. But the way that George Selgin is describing it right here, this is not neutral the dollar. This is $350 billion of brand new money, brand new base money that would be inflationary. Now, how inflationary would it be? Depends on how fast they sold it, depends on what they used it for. But it is very related to a speculative attack. It's revaluing, it's creating new base money by marking to market their gold and then buying Bitcoin with that. So, yeah, it is a speculative attack, print money to buy Bitcoin. The Treasury could then buy 64 billion of Bitcoin using just a fraction of its windfall. Easy. But there is always a but. First, every amount the Treasury spends out of its TGA balance adds as much to bank reserves. So this plan will add at least 64 billion to those reserves and could add as much as 347 billion, or more than 10% increase. That's a huge inflationary stimulus. And the Fed must pay interest on those reserves, though it will not have any corresponding interest earning assets to pay with, for gold certificates are not interest bearing. So if they are holding treasuries, they're earning a little bit on that. But if they're holding these gold certificates, they're not earning any interest. So they're going to have to pay for these new deposits, earnings on these new deposits without any interest earning assets. Very interesting. In the long run, as I noted earlier, the Fed must earn enough revenue on its portfolio to cover its operating expenses, including interest on reserves. Otherwise, we run into this problem mentioned earlier. Okay, so that's all I wanted to say about that. Let's go back to the report, if I can find it in all my tabs. Where are we at? Here we are. Okay, so that was all about this strategic Bitcoin reserve. When you add it to Trump's announcement, this is a very big deal. It shows the congressional momentum in this direction. All right. Other states and governments announce Bitcoin reserve goals. So almost instantly, Louisiana came out, and here is the governor of Louisiana. Louisiana is a leader in Bitcoin, banning CBDCs and protecting self-custody. We should continue to lead by having a strategic reserve of Bitcoin, like Donald Trump suggests. Hong Kong also, they immediately came out within 24 hours. So this is Dennis Porter. He said, big breaking, Hong Kong lawmaker endorses strategic Bitcoin reserve strategy. So this is just one lawmaker, but the idea is spreading. Okay, it's going to come up for a vote in many of these countries. However, it would not be in their best interest to telegraph their intentions prior to stacking. The interesting thing with government reserves is they will likely have to go through a public process to proceed. So they're going to go through this process and allow people to front run them because it has to be public. Very interesting kind of game theory here for these governments. Okay, Michigan adds Bitcoin to its pension fund, following in the footsteps of neighbor Wisconsin. Didn't have anything to add here, but this is going to continue. $6.6 million purchase, so pretty decent sized purchase here. And all right, in Kiev, men abducted and killed foreigner for $7 million in their currency in Bitcoins. National Police. So this is a big OPSEC warning for people, especially as we go to new all-time highs and all that. And this is very important to understand. So 4 men kidnapped a foreigner in Kiev, stole almost 7 million of their currency from him, and killed him. The offenders were preparing for the crime in advance. They found out that the man had Bitcoins worth 7 million currency and decided to take possession of them. The defendants tracked down his address and around midnight, When he was returning home, they beat him, forced him into a car, and took him to an abandoned building in Kiev region. There, they forced the victim to transfer bitcoins to their crypto wallet and then strangled him. To hide the traces of the crime, they changed the car's license plates and appearance, took the body to the forest where they buried it, and cashed in the Bitcoin, the police added. So again, OPSEC, very, first off, keep your presence online as minimal as possible. I've made a choice many years ago that I'm going to use my actual name on these things, but OPSEC is very important. Always be aware of your surroundings, talk to your neighbors, get to know them, make friends, vary your routes of travel, vary your schedule when you come home. When you do come home, make sure you check your surroundings, have a plan, maybe even practice a plan. So someone's following you in the car. What do you do? Where do you go? When you get home, you notice there's people staked out in front of your house. What do you do? Think through some of these things. Heaven forbid you ever get into that situation, but it is incredibly important to have good OPSEC. All right, so that's all the Bitcoin headlines. Let me go and check the comments. Dex, what's up? Still no comments there. If you guys are watching on Twitter, you can jump over to YouTube or Rumble. Let me make sure all the platforms are going out here. Okay, it says streaming. All right. Let me check Telegram, see if they're mentioning anything. No comments in here yet. All right. Well, drop your comments, guys. And if you're watching this later, drop your comments in there. I try to respond to comments if you have questions or if you have a legitimate comment. Of course, there's a lot of bots and there's a lot of scams that get into the comment section on some videos, but that's how it is. All right, let's keep chugging along here. Going to the macro update. So macro, US, the GDP came out for this year, Q2, and it came in above expectations at 2.8% annualized. You can see here. I think it was estimated to be 2% annualized, but it came in at 2.8, so that's a huge beat. Of course, you can see the trend coming down here the last 3 quarters, and then this one surprised to the upside. We'll see. This will be revised. After these come out, they have 3 revisions. The next month, the month after that, and then when they release the following quarter, they have a final revision to the previous quarter. And so we'll see how this gets revised over the next couple months, but I don't suspect that it's that much different. I mean, it might move down to 2.5 or something like that, but this is pretty big. This is pretty big. It does not show that the U.S. economy is slowing. I mean, 2.8% is like the minimal amount of growth that the economy needs to have to feel okay. If you just have 1% growth, it's low growth, low inflation environment, and it just feels recessionary to most people. It's going to be sluggish. There's going to be unemployment is probably going to be higher. There's not a lot of profits to be had. Interest rates will probably be very low. So the low growth, low inflation environment is very hard to handle. 2.8% is, again, that's about as low as you want to get to have a feel of a functioning society. And the younger generations to feel like they have some chance in life. If you have 1% growth for 20 years, the young people are going to become disenfranchised because there's not enough growth to go around. But anyway, okay, let's continue here. I said this was kind of a shock because I was expecting the U.S. to slide into recession. However, this could be revised down, or it could be a temporary 1-quarter improvement. Okay, next headline is U.S., Japan, South Korea sign a pact amid deteriorating regional security. And this was from Defense One, and they're talking about this. The first ever gathering of defense chiefs from Japan, South Korea, and the United States, because these two don't really like each other. There's actually been recent trade spats and everything going on between Japan and South Korea, they don't really like each other. But what they did here was they had two bilateral talks. So the Japanese were talking to the Americans and the Americans were talking to the South Koreans. So there's two bilateral conversations going on. And even in their kind of results or reports from what they accomplished, they were reported as two bilateral agreements, which is very interesting. Okay, grave concern over Russia-North Korea cooperation and vague opposition to unilateral attempts to change the status quo in reference to China and Taiwan. A key topic of discussion between the United States and Japan, so here's this bilateral side, was the co-development of counter-strike missiles such as a PAC-3 missile, MSE, and Raytheon's AIM-120, AMRAAM. In another bilateral statement, the U.S. and South Korea defense chiefs said they discussed the, quote, illegal arms trade and transfer of high technology between Russia and North Korea that violate the UN, this was a typo, it's supposed to be UN Security Council resolutions, and vowed to continue to enforce the UN Security Council sanctions in close cooperation with the international community. So this is growing. This is a growing pact. Japan is definitely going to be in the sphere of the United States going forward in the deglobalized era. You're going to have most likely the strong alliance is going to be North America, Japan, England, and perhaps Australia or India, one of those countries. That's going to be the real strong free trade pact going forward. And so South Korea wants to get in on that. They really want to get in with the United States, but again, they have this problem with Japan. They just don't like each other. So, interesting development there. Next headline. France finance minister, Mexico must produce more amid growing trade deficit with China. So, in 2021, President Obrador, however you say that, asked me to develop what he called Plan Mexico. This is a plan to create awareness that Mexico, like North America as a whole, needs to produce more than it consumes, that we're depending too much on basic products from China for our homes, he said. Mexico has to carry out its own review because we buy $119 billion worth of products per year from China, and we sell only $11 billion worth of goods to China. China sells to us, but doesn't buy from us, and that's not reciprocal trade, said Ramirez, who will stay on as finance minister after the new president, Sheinbaum, is sworn in as president on October 1st. Okay, so it's not just the United States. I say this is important news because the U.S. is not alone in its crackdown on China dumping practices. Europe and now countries like Mexico are raising the alarm. China's economic model was built for the waning global order. It cannot handle the new order of trade blocks, North America being the most powerful. Okay, so that is all of my macro headlines. Let's get on to some price analysis. Just checking comments. Deck says, good thing that you can always be strapped in some southern states. What was that in reference to? Let's see. OPSEC. Yes, that's very true. You can always conceal carry. You can open carry everywhere now. So that's a good thing. Okay, let's go on to price analysis. And I'll make this bigger for guys over there on Telegram. All right. So it's been 2 weeks since my last newsletter. So let's review where we were back on July 15th. So not last week, but last issue, I should have said. We are approaching the major resistance zone at 65,000. And this is my chart from last issue. And you can see we're going up into this cluster of resistance. And we've talked about that on, multiple other live streams since then, just not on one of these reports. Also, last issue, I said important level to the downside is 58,000. To the upside, breaking the 50-day MA at 64,000 will be huge. So breaking this blue line, the 50-day moving average, to the upside, it was going to be huge. All right. At the time of writing, A tweet just hit showing that the US government is moving Bitcoin. The expectation is for this to be sold. That was the initial expectation. That has changed, but we're going to go through the story. So I'm just writing this, right, a couple hours back, and boom, this hits the airwaves. And so I have to put this in here because it was affecting the price immediately as I was writing. This story is still developing. The address sent to is unknown. It would be monumentally stupid. Stand by. Sun just comes in and loud as hell. Okay. The story is still developing. It was sent to the unknown address. It would be monumentally stupid to sell Bitcoin after the actions of Trump over the weekend. Had to talk to the boy. All right. So, yes, this would be monumentally stupid if they are selling this. Here is the tweet from Arkham coming out and showing that they moved this. The U.S. Marshal account holds all of these coins, I believe, and they sent it out. It was like 39,000 Bitcoins. Is that what it was? Or 29,000 Bitcoins. Yeah, 29,000. I can see in the image here. Okay, several weeks ago, I tweeted this. I tweeted anticipating this move. If the globalists start selling U.S. held Bitcoin to undermine Trump's agenda, not fudding, but they hate him so much they might do something like that just to get back at him. And that was the initial thought. Everyone was thinking that they were going to be selling. It did affect the price immediately. You can see today's candle here was down. It was breaking 70,000, and then it was down all the way down to 66,000 on this news. Let's take a look at the live chart because I think it has come back quite a bit. And I'll share this tab and make this bigger. So it has come off of that low back. We'll see where it closes the day. I think it can close the day green, but we still have several hours for that to happen. Traditional markets are closing here pretty soon. We'll get to see the flows for the ETFs, what happened today after the big Trump stuff over the weekend, probably pretty big numbers. So very interesting move. This might springboard us tomorrow up to, that 72,000 where all that liquidity is right now. Okay, going back to the report. Bitcoin is comfortably above the recent resistance. And if I bring this up, you can see all of this resistance right here that we did break up through. It took a while to get through that resistance, but we broke up above it, back tested it, hit the 50-day moving average on the nose. And for people that don't agree with TA, I mean, this is pretty hard to explain how these levels are consistently hit like this. But we did back test this zone and we were ready to break out. It was really ready to break out until this news today. So maybe this just delays the breakout by a day. We'll have to see where we end up. With the information we have and the information we don't have, for example, there's no announcement by the government that they will be dumping these coins. At this time, I'm calling it FUD. We'll have to wait and see over the next couple of days. Prior to this move, I was hoping to set a new all-time high this week. Those plans are now on hold. It is a good time to continue accumulating and buying the dip. Any significant sell-off is going to be a massive buying opportunity. Anything the U.S. government sells at this point is going to be bought directly by large investors, pension funds, and even secret strategic Bitcoin reserves springing up around the world. All right, so then as I was writing, again, there was new information that came out. So I say breaking at the time of writing. I didn't want to go back and rewrite this whole section, so I just kept adding. It looks like these coins have been split, and Arkham believes that it is a custody service. Another point in favor of this not being a selling issue. Now, more on price. The Bitcoin heat map is extremely important here. The level at 72 to 73,000 is still a magnet for price, and we can see this here. These are all the liquidations that will happen just on Binance alone, and this one trading pair. There is over $12 billion in liquidations at this level. So that is like sucking the price right there. Price will search out liquidity like this. This is liquidity. So I do think that we're experiencing some volatility right now, but it is searching out for that liquidity, probably rally quite hard when it turns around. Let's go back to the live price chart. And I just wanted to bring up the Ichimoku cloud. This is something I talk about with the premium content members. But when we were here breaking out the top of this cloud, I was pointing out that we had the twist coming up right here. So see where the cloud turns from the green color to the red color, and then it actually flips right here again for one section, and then it turns back red again. That twist is typically a place where you'll find more volatility because the thickness of the cloud is kind of like support and resistance strength. And when you have a twist, that means it's kind of neutral at that point. And so back here, when we broke out, I highlighted this twist. I said, we're going to see some volatility around this period. And lo and behold, we stab right through the twist. Then we come back up, and then we're falling back, maybe testing this twist. Because if I zoom in real close, you can see this cloud does turn green again here. So this is more volatility ahead. So this is interesting how this turned out like that. We will see, again, watching how this turns out today and then going from there. But heat map is still showing 72,000. That's the ultimate next zone. Like the confidence of hitting 72, 73, which would be pushing us to a new all-time high. That confidence level for that prediction is very high. Whether it happens this week or next week, it's going to happen very soon. And from there, then we have to go on to what happens after that. I think most likely we go even higher, that those liquidations push us even higher, perhaps up to 80,000. But subscribe to the premium stuff. I go into depth on different charts, different fractals, different everything on that. Okay, overall, this move lower is likely very temporary. There is still a possibility of hitting an all-time high by the end of the week as volatility returns. Levels to watch are to the downside 65,200 or the 128-day moving average, and to the upside any new high above today's intraday high of 70K. All right, so that is the price section. Let's move on to the mining sector, and before I go there, let me just check the comments. Yo, Doug209, what's up? 80K is totally doable. Yeah, Dex, I agree. It's a very small move. I mean, going up to 100K right now is under 50% move. I mean, just saying it that way, 100K is totally doable. Let's go back to that price chart real quick. And I hope I was sharing that. I didn't check if I was sharing that. Whoops. Okay, so let's take off this cloud and let's go to the weekly. And we're just going to zoom out here a little bit. All right. Make sure we're on log. Zoom out. And we'll find this right here. Last March, when we had the banking crisis, Bitcoin performed very well during the banking crisis of 2022, March of 2023. Performed very well, jumped 45%. If we jump 45% right now, we're at 100K or right under 100K. So this can move very, very quickly. What was this move? This was 25. That would put us, what, about 85, 90. And this move here was enormous. I mean, just look where it took us. All the way up. This is the pre-ETF move. 1, 2, 3, 4, 5, 6, 7, 8 weeks. In this 8-week period, the price went up over 60%. So yeah, we can go to 100K very, very quickly. And if you're talking about flows from the ETF, I mean, we just need continue having similar flows to last week and we'll be there. This move during or after the ETF launch was 90%. So a 50% move getting us to 100K, very, very doable. I mean, it's almost a given. In my mind, it's almost a given. All right. Headlines. Make this bigger. headlines for the mining sector. So Bitcoin mining will thrive under a Trump administration, says the Marathon CEO. I think he was speaking at the conference here. However, I think that Republicans have kind of seized the day on this. And I think under a Trump administration, you're going to see Bitcoin mining flourish. Under a Harris administration, we have no idea what the energy policy is going to be. Yes, you do. She said they're going to end fracking. Biden has been horrible for new land leases for the energy industry. You know what Kamala Harris is going to be. It's going to be a continuation of Joe Biden cracking down on the energy industry and probably cracking down on climate things and demonizing Bitcoin mining. It's not that you have no idea. You're just trying to play nice, but we do have an idea. The statement was made on stage at the conference this weekend. Overall, Bitcoin 2024 was extremely bullish for the Bitcoin mining industry in the US. Some people are worried about Bitcoin mining becoming too centralized in a single jurisdiction. About 20%, maybe up to 25% now is in the US. I expect that to continue to increase. They actually think that favorable rules that are attracting people to the US, favorable schemes like ERCOT down in Texas with the subsidy that they give the miners to turn off their mining, like these type of things are being developed in the United States, and people actually think that's bad. It's not a bad thing at all. It's showing the way for other countries how to do it. This might be the case, however, so it might be the case that this is concentrating into a single jurisdiction. However, it also is in no danger in the foreseeable future. So Bitcoin mining is in no danger from the US government in the foreseeable future, I guess, unless Biden or Kamala find out some way to get elected, then it would be in danger. And of course, miners are looking at that. They're thinking about that. And yeah, that probably works into a lot of their stock prices as well. So that's something to be watching for. And will serve as an example for the rest of the world. Bitcoin mining will be seen in everyone's national security interest and expand everywhere, as we can see in our next story. So our next story, Russia advances cryptocurrency mining bill. Regulation of mining at the legislative level can stimulate the development of the industry, attract investment, and create new jobs. So this lawmaker highlights, it passed the lower house of the Duma. I guess there's a lower upper house, and it has passed the lower house now, so we'll see where this goes. But they are saying that Russian miners produced approximately 54,000 Bitcoins valued at over $3.5 billion just last year alone. The proposed law sets strict guidelines for individuals and entities involved in Bitcoin mining. It's not cryptocurrency mining. There is no other mining other than Bitcoin. I mean, you're not mining Ethereum anymore. What else are you mining besides Bitcoin? Nothing. Okay, with oversight from the Ministry of Digital Development, registered Russian legal entities and individual entrepreneurs are permitted to mine legally. Non-registered Russian citizens can also mine if they comply with specified energy consumption limits. Additionally, the legislation requires miners to disclose information about the obtained Bitcoin and related transaction identifiers to the government. Okay, so yes, draconian. Yes, it's a list, but they're opening up. It's legal for these people to mine there. So you can't let perfect get in the way of good. That's my opinion on this. Okay, next topic here, we have Bitcoin mining giant Marathon buys 100 million worth of BTC, and they announce a full HODL strategy. In a statement, the Florida headquartered firm, Florida, says it just bought 100 million worth of Bitcoin and currently holds over 20,000 BTC on its balance sheet, which is currently worth 1.3 billion. The Bitcoin miner says that aside from buying more Bitcoin on the open market, it also plans to keep all of the Bitcoin that it mines as it adopts a full HODL approach towards its Bitcoin treasury policy. And it already was kind of there. I think they mine a significant amount of Bitcoin, and I think that they sold about 50%. I mean, that's a rough ballpark. They would sell about 50%, stack about 50%. So this is a pretty significant deal that they are going to be hodling all of their Bitcoin that they mine. Where are they getting their revenue? Well, most likely they're raising it. They're raising some debt, and they're going through this bull market right now. They see the next 12 to 18 months as a massive bull market. And so they are just going, probably financing themselves off debt for the short term until we get through this bull market and they can sell the Bitcoin for some profit to pay back their debt. And of course, they wouldn't have to sell nearly as much as they would have to sell today if the price 10x's, right? They would only have to sell 10% of what they would have to sell today. So this is a pretty good strategy. We believe Bitcoin is the world's best treasury reserve asset and support the idea of sovereign wealth funds holding it. We encourage governments and corporations to all hold Bitcoin as a reserve asset or a cash asset. I wonder when that's going to start making its rounds. Like a reserve asset, yes, but it's I mean, it's kind of a cash equivalent. You can turn it into dollars pretty quickly if you need to. And you can send just the Bitcoin as well. So it is kind of a cash asset. Given Bitcoin's current tailwinds, including increased institutional support and an improving macro environment, we are once again implementing this strategy and focusing on growing the amount we hold on our balance sheet. All right, good for you, Mara. Disclosure, I do own some Mara. I was in Hut, sold the Hut, bought into Mara. I think on these, they have the most Bitcoins for any public miner. And I think that as the price really rallies hard, they are going to benefit from this massive stash of Bitcoin that they own. Okay, hash rate and difficulty. Hash rate has exploded with the price increase as predicted. Difficulty has increased and should recover rapidly over the next couple of adjustments. And maybe over the next adjustment, I mean, it's going to rise 11%. That's going to get right up close to an all-time high in difficulty. Hash ribbons have raced into a buy. This is the short-term and long-term moving average of hash rate. When they cross bullish, the price is over the 20-day moving average, you get a historically strong buy signal. And if you make this bigger, you see we finally got a blue buy. We did not get a blue buy back here because even though they did cross right here, because the price was under the 20-day moving average. Now we have the price over the 20-day moving average. Big rally here on the hash rate, and so we did get that buy signal. And this is a pretty solid buy. I mean, just look at this recovery of this short-term moving average of hash rate. It's really going bonkers. So I think this is a very strong buy signal right here. Okay, mempool. Mempool consolidating around 145 megabytes for the last 2 weeks. Fees are stable, under $1 as well. There's no sign that the market is sniffing out any sort of contraction or correction here. If so, we'd expect fees to be rising as uncertainty led people to move coins to exchanges. Therefore, a very quiet mempool. What did I write here? I messed this up. To new all-time highs means the price could rally far past 73,000. So the quiet mempool, not quite, but the quiet mempool says that we're ready to break out, most likely past 72,000. That's my prediction or my interpretation of what the mempool is telling us. And you can see down here, we have gone up slightly over the last few days, have not gone into the next band of fees. So these bands are different fee levels. And so pretty unexciting over the last couple of weeks. Okay, on to layer 2. So surprisingly, there was very little talk about layer 2 on the main stage at Bitcoin 2024. Of course, I didn't watch all of the panels and the talks, but I would say about 50% in background listening and about 25% in actual listening to all of the people discussing. I did catch one panel discussion, which I'll likely react to in the future. Oh, that's the other one I wanted to react to. This is the one with Paul Stortz and other layer 2 people talking about layer 2s. So I'll probably react to that in the future. Certainly, there was more action on the smaller stages at the conference, but they didn't make any headlines. All right. So what about Inscriptions and Runes? This is just an update. I don't own this. I don't recommend anybody play with runes or inscriptions or ordinals or any of those things, but they are a significant sector of Bitcoin right now, and so they need to be reported on, in my opinion. Just at your own risk for all this stuff. It's hard to imagine that just a couple of months ago, the Bitcoin community was up in arms about runes and inscriptions. Today, there's barely a peep. Runes were the latest hotness, and we were told they'd be very popular because tokens and NFTs are the future. Remember that? NFTs are going to be so great. They're coming to Bitcoin. Tokens are coming to Bitcoin on these protocols. And there was this huge debate about whether we should just block these things from actually getting onto the blockchain, like miners colluding to block these type of transactions. And now we don't hear anything about it because they just have withered up and died, basically. I have been unconvinced by the economic arguments for NFTs on any decentralized network. So not just Bitcoin, but NFTs are dumb as a idea. And I've gone into this multiple times. If you guys want to know more, ask a comment down below. They don't make sense above a very niche and obscure market. So I do think NFTs might be valuable in things like video gaming. These would be on a centralized database. The video games database, they don't need to be on Ethereum. They don't need to be on Solana. They don't need to be on Bitcoin. They can be in a centralized database. There's no reason for them to for these electronic signatures, because they're not actual they're not actual images. Okay, these are electronic signatures. There's no reason for this type of electronic signature to be on a decentralized database. Doesn't make any sense. But there is a small niche market. Before Bitcoin came around and Mt. Gox was trading Magic the Gathering cards and things, there is a big market. Who was it? Wasn't Trace Mayer? Was it Brock Pierce? Is that his name? He was running a website that would trade these weapons like in video games. And he was making tens of or hundreds of millions of dollars every year running a website that traded these in-game weapons and tokens. So there is a market for that, but it's a small market. It's a $5 billion market, not a $5 trillion market or even a $500 billion market. No, it's a $5 billion market. And that's what NFTs rightfully should be considered, part of that $5 billion market. That's it. Selling the one-a-days from, what was his name? Beeple, selling Beeple the NFT of his 100 days or once a days, and it sold for 69 million or something. I mean, that is just ridiculous. I think it was mainly dominated by money laundering and just pump and dumps and money laundering. That's what the NFT market was. And anyway, so these runes and inscriptions show that they don't really have any demand. See, the pink is the runes, very, very small amount of volume compared to regular transactions. No one cares. Inscriptions, same thing. I am surprised that it's non-zero, it's above zero, but it's pretty much flatlined on the total number of inscriptions. No one cares about these either. All right, and the last section, in case you missed it, I plopped down 6 of my previous posts from last week, so you can check those out. Forward the newsletter to people that you think might enjoy this, might find value. Forward this live stream to people that might find value, and you have some tip links down here below. All right, that's it. Let's go back up to the top. I'll check the comments one more time. Okay. BTCP says he loves that the weekly RSI reset to 50. Lots of room to run. Let's take a look at that. I haven't looked closely at that. We have that. Let's get rid of that. And we'll bring up the RSI. Yeah, that's a very nice reset. Back to these same levels from last August before we went on this massive 60% surge. So that's very nice. Yeah, I do like that a lot. Just going back in history here to see about where we're at. Compared to back here. Some of these corrections back in 2017, 2016, 2017 didn't touch 50%. This one did. But we're in a slightly different era now. So yeah, I like that. We didn't fall very far either, to be honest. What was this correction? 20%, right? I have all these measurements. Let's just take one from the top and go down here. So we were at 27% total on this correction. Very, very small correction in Bitcoin's history. I mean, like in a bull market correction, we're used to seeing 40%. I think, trying to remember, I believe it's like between 35 and 45% is a typical bull market correction. And this being only 27%, and this was pretty easy. I mean, for me, this was a pretty easy dip. I did have a couple days in here. Well, where was it? Let's go back to the daily where my confidence was tested. But, you know, right back here, late June, my confidence was being tested. But there was some other stuff going on at that time, like Bitcoin Magazine Pro. I was leaving there. And so my confidence at that time in the price was not very good. But this dip actually was easier than this period. The dip in July with the fundamentals going on was easier mentally than this dip here. So anyways, good comment. Release of suppressed energy tech. Public ledger of ownership for things like property instead of gov. So Doug 209, that's a good question. So public ledger of ownership for things like property. This is the, oh man, I was not sharing that tab, guys. Oh man. Let me just talk about this real quick. So this is where my confidence was being questioned. And this dip was actually easier because of the fundamentals going on at that time. But yeah, that's that. And then, let's go the weekly and we'll show the dips and the RSI. Sorry, I was all messed up on that. Let's bring in the RSI. This dip in the RSI reset right here, 48. What was the actual bottom? 45. That's good. Right at the same level as this one over here. So that's interesting. And then I zoom back here to 2017, which I think this bull market is going to be a mix between 2017 and 2020. So you can see this sawtooth pattern back here with the RSI. And I think that's what we're seeing in one of these sawtooth patterns here for the RSI right now on the weekly. Okay, sorry, I didn't have that shared. Okay, so Doug asked about a public ledger for ownership of property. And the reason why that doesn't make sense is because, well, one, there's no reason for it to be decentralized. It could just be a JSON database or a SQL database. You don't need to have it be decentralized. Because if you have it decentralized and you tokenize property, you have what I coined as the dual consensus problem. So you have two worlds, universes of consensus. You have the physical world, my physical ownership of this property, whether it be a car or a house or some fine artwork, you know, like an actual painting, some rare painting. And you have the physical possession of it. Possession is 9/10 of the law. Well, what happens if my token gets hacked? Do I then have to deliver that physical property to the guy that hacked my wallet? No, of course not. So the consensus on chain, the decentralized consensus, is different than the physical consensus of the physical reality of the world. So that's why you have this dual consensus problem for physical tokenization of property. Okay. That is the main reason why tokenization is silly, because you can't do it. Other than that, it can't be decentralized. It might as well be centralized database. And then you have the same problems again. You have to have a legal authority. Okay, so the tokenizing stock certificates, ridiculous idea. They're going to have to be able to roll back the clock. There's no reason to have them on some sort of blockchain that has some sort of consensus mechanism. No, the consensus mechanism for things that need to be rolled back that are subject to law are going to have to be centralized. Tokens don't make sense. Okay. Dex and Victor's great stream. Thank you. Shared. Thank you. Doug. Possession is not, yep, there you go, Doug. Possession is 9/10 of the law. That's why the dual consensus problem negates most ideas about tokenization. Let me go into Telegram and see if they have any comments. No comments in Telegram. A lot of times the Telegram folks jump over to the live stream on the other platforms. But all right, so where am I at? All right, well, I'm going to wrap the show there, guys. Ansel Linder, Bitcoin and Markets. Check out bitcoinandmarkets.com. Appreciate you guys joining today. Hope you had a good start to your week. Join me on Wednesday for the FOMC meeting. I will be live streaming at 2 p.m. to catch that FOMC meeting, if possible. I mean, my life is kind of crazy with 4 kids. So, if at all possible, I will be live streaming at 2 p.m. And then later, maybe I'll do a live stream just on Telegram for watching the press conference, because that's always fun. But all right, that's going to be it for today, guys. Thanks. I'll see you on the next one. Bye.